Dunedin cost insurers $28 million. That's a relatively small sum, and it's entirely dwarfed by earthquake payouts in Christchurch, for example. But with the frequency of flooding claims rising, insurers have paid out in Dunedin, Whanganui, Wellington and the West Coast in the past 12 months, and highly likely to rise further. Insurers are saying money that's not spent on updating infrastructure will end up on insurance premiums. Tim Grafton is the CEO of the New Zealand Insurance Council.
Well, John, it's going to be a growing problem over the years. Climate change, as we know, we've seen a lot of evidence that talks about sea level rise. When you combine that with heavy rainfall and our ageing infrastructure of stormwater drains and the like, what that spells out is that we've got a growing problem around the country, particularly where there's housing in low-lying areas. So if you look at South Dunedin, that was basically a swamp area in the 19th century. Decisions were made to build on it. There was a storm last year, which was, I think, the heaviest rainstorm, or the second heaviest in 100 years. And so there was aging infrastructure, 50 to 60-year-old stormwater pipes, just incapable of coping with that volume.
And is it your concern that this is going to become increasingly common?
Yes, that's right, particularly in parts of New Zealand where we have ageing stormwater infrastructure built before climate change was ever factored in, increasing population and development in those areas over that time, hard surfaces, which means that water doesn't soak into the ground and therefore contributes to flooding more, and then sea level rise, which starts to bring seawater back inland and therefore blocking up stormwater drains at the same time as you might get a high tide and a storm event. So that combination can be extremely damaging and cause all sorts of social and economic disruption for people.
Have you been sounding the alarm on this? Are you talking to people about this? Are you saying it's time for an increased spend? What are you saying?
Yes, we have. We produced a 15-point plan about 18 months ago. We've been talking to councils about natural hazard risks, and this is one area that we have been banging on and will continue to do.
And are you being taken seriously? I mean, I know that there's an element of self-interest here because you want to protect the insurers you represent from having to do massive payouts. But at a infrastructure level, are you being taken seriously enough, do you think?
Look, there's no pretending that this isn't a very difficult problem, because we're talking about spending to save dollars in the future, and always there are more immediate priorities for councils to look at. And there are councils around the country with very small population rating bases that simply are incredibly challenged to meet some of the infrastructural investment that's going to be required. In terms of insurer self-interest, yes, to an extent, but also if you want to keep insurance available and accessible to people to transfer that risk, then you've got to reduce the risk, and that means investing in adaptation measures such as building the capacity of modern stormwater drain systems.
Because what you're saying is if that doesn't happen, insurance premiums are going to go up.
Well, if risk goes up, then insurance will respond typically either by increasing premium or increasing the excess. That's the amount that the insured pays before the insurance kicks in.
And if you look at the low-lying levels, which are prone to flooding and which are prone to the seawater blocking the drains, coupled with ageing infrastructure, is there going to be a situation where you will say flooding is out of your insurance policy, we won't cover it? Will you eventually be saying that?
Look, I can't say that because that's an individual decision for each insurer to make. But if we do nothing over the coming years and sea level rise brings about more and more frequent flooding, then that is a possibility that some insurers could look at.